Ladies and gentlemen, Tesla stock is up about 2% at the time of recording this video, and we have a lot of big news. In fact, this should be having a much bigger effect on Tesla today. In fact, Tesla has already started robotaxi operations in Austin, Texas. This is incredible. Over 1,500 rides have already been completed. Now, beyond that, the broader markets are also doing quite well, at least at the time of recording this video, obviously subject to any crazy headlines that come out that could change. But I think people are preparing for de-escalation of the trade war coming soon with China, something we talked about in yesterday's video. And we'll discuss that in this video and all of your broader market news today. First, look at this. Tesla has released a new video saying the FSD's supervised ride-hailing service is live for an early set of employees in Austin and the San Francisco Bay Area. Tesla has already completed over 1,500 trips and 15,000 miles of driving. That is impressive. And there has been no accidents that we know of, no incidents, no issues. I mean, this is incredible. Tesla is actually doing it. Okay, now, yes, there is obviously someone in the front seat here, but I imagine without interventions. Also in the news today, Tesla is in a pre-planning stage to add a car rental operation at a collision center in Sacramento County. And some of the news that came out last night, Trump is planning to exempt some car makers from tariffs. The move would exempt car parts from the tariffs that Trump is imposing on imports from China, as well as those levied on steel and aluminum, a destacking of the duties in parentheses there. The exemptions would leave in place a 25% tariff Trump imposed on all imports of foreign-made cars. A separate 25% levy on parts would also remain and is due to take effect on May 3rd. So again, Tesla stock today likely reacting to some of this positive news as well that came out overnight for car makers. Volkswagen will supply thousands of electric vans in a collaboration agreement with Uber as the partners seek to offer rides in fully autonomous vehicles in the United States over the next decade. Nissan sees a record net loss of up to $5.26 billion for the fiscal year that ended in March, they said on Thursday, due to impairment charges as the struggling automaker is restructuring. Now, before we get into all of your other Tesla stock news, option activity, what the short sellers are doing, all of that, let's get into the broader markets. What's moving stocks higher today and all of your big headlines? First and foremost, this morning it was reported that Japan will resist Trump's efforts to form a trade bloc against China. American Airlines beat on Q1 earnings with a loss per share coming in at 72 cents versus the estimate of 69 cents. So that was not exactly a beat, but revenue did beat at 12.6 billion versus 12.53 billion, and passenger revenue came in at 11.39 billion versus the estimate of 11.36 billion. So a miss in some areas, but overall, I would say pretty good. And again, here's that news from earlier this morning. The US is considering exemptions for some Chinese auto parts. And the Eurogroup's president Donahoe says the EU wants to look at how to balance ties with China. So there's more of a friendly tone, if you will, today globally for China. UK's chancellor says, I understand US concerns on trade imbalances, especially in China. And he says, we don't always agree with the US on policy prescriptions, but I am confident a trade deal can be done. U.S. existing home sales came in at 4.02 million. This is the lowest number since 2009. Fed Waller says tariffs are part of most economic debates now. He says, I wouldn't be surprised to see more layoffs and higher unemployment. He says that smaller tariffs will have a modest pass-through, like won't be super inflationary. He says it is not likely that by July there will be clear tariff impacts yet. So he's saying it could take a lot longer than some people expect. And Fed Waller says something that I've been saying for a while. He says the easiest place to offset tariff cost is by cutting payrolls. Especially with large tariffs, if companies are not able to pass on those costs to protect margins, they can become more efficient in their operations. They can use AI, they can, cut out a link or two to the supply chain. They can do certain things, but the biggest way to boost up those margins again would be laying people off. That's what I've been saying for a while. I haven't heard any Fed official actually say that, but Fed Waller did today, and it's kind of refreshing to hear a Fed official that thinks with common sense. He says we could see prices going up as layoffs start to happen. Fed Waller says it's possible that tariffs could push up the unemployment rate quickly. And he says that he still strongly believes that tariffs will be a one-time price level effect. So he's not concerned about ongoing inflation from tariffs, which is a relief to hear because no other Fed officials are really saying that. They're more so leaning towards this, tariffs could be a one-time boost, but then other companies that aren't even affected by tariffs may start to raise prices as well, just because they can get away with it, essentially. Fed Waller says demand slowdown from tariffs would offset some inflation impacts. Again, this is something we've talked about on this channel before. If we see material tariffs go into effect globally, you're going to have a recession. A recession is deflationary, right? You're not going to see inflation in that environment. But he says it's going to take some courage to stare down tariff price increases and see them as transitory. And he says that rate cuts could come from rising unemployment, and that could be part of why markets are doing well today. And Fed Waller says the president is free to say what he wants about the Fed. Mexico President Sheinbaum says the minister Amador his meeting with Besson was, quote, very good. So progress, it sounds like, on a Mexico trade deal. Iran told U.S. envoy Witkoff that Trump's timeline for a deal may not work. Trump says that fentanyl continues to pour into the U.S. from China, Mexico, and Canada. It will be interesting to see if this is one of the things that he kind of reverts back to, like, hey, we're going to drop the other tariffs, but that 20% tariff for fentanyl is going to stay in effect until the fentanyl stops coming in. Okay? I could kind of see this as a way for Trump to get rid of the other tariffs and to keep the 20%, which would be a very much a positive development at this point from the current 145% tariff that's on China. Now, China says there is no ongoing trade talks with the U.S. They're calling for canceling of the unilateral tariffs. Now, what that means is unilateral is one-sided, right? So they're basically saying the U.S. started this, the U.S. put the tariffs on, they need to cancel the tariffs, which is interesting. It says, quote, at present, there are absolutely no negotiations on the economy and trade between China and the U.S. Ministry of Commerce spokesperson He Yedong told reporters in Mandarin, translated by CNBC. He added that all sayings regarding progress on bilateral talks should be dismissed. If the U.S. really wants to resolve the problem, it should cancel all the unilateral measures on China, he said. Now, it goes on to say, quote, China definitely wants to see the trade war de-escalate as it hurts both economies, said Yi Su, principal economist at China at the Economist Intelligence Institute. However, due to the inconsistency of Trump's policies and the lack of clarity around what he actually wants, China's strategy has shifted from focusing on what you need to what I need. Their request for the U.S. to cancel unilateral tariffs reflects that shift. Quote, we also need to recognize that this is a whatever-it-takes moment for China in terms of U.S.-China relations, Su said. I wouldn't be surprised if China adopts a more hawkish stance if the U.S. continues to escalate tensions. From China's perspective, any meaningful negotiations will likely require the U.S. to reduce tariffs to the previous 20% or even a lower level. But for the Trump administration, however, reducing tariffs too far could raise uncomfortable questions. What was the point of the confrontation if we end up back where we started? So in a little bit of a tricky situation, I think Trump wants to send the tariffs back down to 20%. I think that's good for negotiations, right? That's good for getting other things you want. Because let's be honest, I don't think this is about just tariffs. I think this is probably about a TikTok deal. I think this is probably about China selling treasuries in the last couple of years, probably wants China to buy some more treasuries, I would imagine. Like, there's other things that I think China wants here. It wants China kind of out of the interest of the Panama Canal. And while having a 145% tariff on China is just stopping the progress on all of those other things at this point. And I think here very soon, we're going to be getting an announcement that the 145% tariffs are not canceled, but going to be delayed to let there be time to actually negotiate. That is news I think could come out at any moment. And I think that's why markets really rallied today. I think people are getting ahead of that. They're kind of sniffing that news out before it actually comes. Maybe someone somewhere knows something and they already know when that announcement's going to take place. It could be over this weekend. Don't be surprised if tomorrow is another strong day for markets as well. Here on the day today, the CNN Fear and Greed Index is at 29, so you're out of extreme fear for the first time in quite a long time. Barely, though, you're still in fear territory. Market momentum, extreme fear. Stock price strength, extreme fear. Stock price breadth, fear. Put and call options, extreme fear. Market volatility is neutral. Safe haven demand in extreme fear. And junk bond demand currently in greed. If we look at the percent of stocks trading above their 50-day moving average, coming in at 27%. Still on the low side, that's for sure, historically speaking, but making a way higher. Once you get back into like the 50-65% range, that's more of a normal like bull market kind of range. So you do have some room to rise here from that perspective. And if we look at the AI Investor Sentiment Survey, a new one came out today, and you're just really not getting much movement at all, okay? Not on the bull side, not on the bear side. What's actually interesting is bullish investors fell from 25.4% last week to 21.9% this week. So people are feeling less bullish, even though stocks have went up in this last week. Neutral investors rose from 17.7% to 22.5%, and bearish investors fell slightly from 56.9% to 55.6%. So very strange what you're seeing here in this week's AAII Investor Sentiment Survey. I mean, the S&P has been up nicely this week. I mean, so far up about 3%, and people feel less bullish. I can't say more bearish because that number technically did fall, but they feel less bullish. That is fascinating to me, and does probably suggest there is more room to rally to the upside. Again, when that announcement comes that the tariffs are paused on China and it looks like we're going to negotiate a trade deal, that is likely the end of this whole, trade crash, if you will, correction. Just like 2018, where the markets fell 20%. And as soon as China and the U.S. started to actually negotiate, well, markets started to do well again. So don't be surprised if that happens, and don't be surprised if we get that announcement of a delay of the tariffs, a pausing of the tariffs, coming literally at any time. Now, again, for Tesla stock at the time of recording this video, you're up 1.72%. It is a very volatile day, and really anything can happen in the last few moments of the trading day, the last hour or so of the trading day. I wouldn't be surprised if the stock closes up 5% or down 3% these days. It's just very volatile, but it definitely seems like there is a bullish skew now for markets and for Tesla. You are above $250 per share. That's a pretty critical level of support and demand. Like, you want to stay above 250, and you've done that the last 2 days at least. Now, the longer we stay above 250, the better. It looks like we could start to extend higher to the 50-day moving average. That is sitting at about $271 per share. If you get above that, then you're targeting that 200-day moving average at about $291 per share, getting closer to that $300 level. And a break above 300 could send you as high as 336. That is currently where your 100-day moving average is. And I do think over the next couple of weeks, if that China deal gets done, or a pause on tariffs to negotiate, that's the kind of levels that I'm looking at. 300 plus would almost certainly be in the cards at that point, because again, one of the risks for Tesla right now is if this trade war continues and Chinese consumers start to revolt or stop buying US products, that would be a massive, problem for Tesla when China is Tesla's biggest market at this point, okay? So you don't want to see that happen. With that said, option activity currently for Tesla stock today, you're seeing a positive order value of 45%. You have 33 different trades totaling $25.82 million. And if you take a look at what the short sellers are doing today, they're covering about 2.1 million shares. So lots of shares that are being returned today. And that's a pretty good indication that hedge funds and institutions do not want to be short in Tesla stock anymore. Now, durable goods orders today came in really good for the headline number, came in at 9.2%. That's a crazy number. In fact, you were only expecting positive 2%, but a lot of people are just going to say this is front running of the tariffs, right? That March companies really ordered to build up some inventory. That's fair. Now, Chicago Fed National Activity Index came in at negative 0.03 versus expectations of positive 0.11. Durable goods orders excluding transportation came in at 0%. That actually missed the estimates of 0.3%, so that's a little bit weaker. And initial jobless claims came in line with expectations of 222,000. Again, existing home sales came in weak. Fed composite index came in -4. That was the expectation. Manufacturing index came in at -5. The expectation was -2. So a little bit worse than expected there. And then at 5 p.m. today, you do have Fed Kashkari that will be speaking. So be on the lookout for any headlines that could move markets in after hours. So let me know your thoughts around all of this down below in the comment section. Just in the last 2 minutes of talking, Tesla's now up about 2.5%. So it is going to be volatile throughout the rest of the day today and after hours and tomorrow. And again, I believe there could be a really positive China trade headline coming very soon. So let me know what you guys think about this down below in the comment section. Ladies and gentlemen, have a fantastic rest of your day, and I will see you in the next one.